Hello everyone. So in this session we will see an example for rectification of errors. Now here the errors are detected in the next accounting period. So let's see here. Mr. Amit was not able to agree trial balance of last year and return of balance to profit and loss account. Next year he appointed a CA who examined old books and detected following errors for previous years. Now Mr. Amit, he was not able to agree the trial balance. That is, there was some difference in the trial balance of the last year, and the same he has transferred it to suspense account. Then this was written off in profit and loss account, and this final profit after writing of this suspense account was transferred to your capital account. Now next year he has appointed a CA who examined old books and detected following errors for previous years. Now there are some errors which were detected in the subsequent year, that is next year. So let's say we are in that next year. So in current year there are some errors which were detected, but those errors were for previous year. So now in this case what we will do is, see, there are some errors wherein trial balance is not affected. That is, your trial balance has tallied because of those errors. Okay, in that case we will pass a normal journal entry, that is normal rectification entry. But now in this case, since the errors are for previous years, all the entries wherein your income or expense account is affected, those we will route it through your P&L adjustment account. So we will create one separate account known as P&L adjustment account, or it can also be called as prior period adjustment account. Okay, so we will create this account, and in the journal entries wherein the income or expense account is affected, we will route it through prior period adjustment account, and it will be reflected separately in this account. Since the income and expenses belong to the previous years, or the errors belong to the previous years, it is not correct to debit income or expense account directly for the current year. The profit for the current year will not be reflected properly. So we have to debit or credit this prior period adjustment account or P&L adjustment account, and then pass this entry through this prior period adjustment account. Then finally whatever is the balance in the prior period adjustment account will be reflected separately in your current year profit and loss account. And then that will be transferred to the capital account. Now in certain cases wherein there is only partial entry, your trial balance must have been affected last year. Okay, so your trial balance may not have tallied because of such errors. So those entries we will pass it through suspense account. Okay, those entries we will be passing it through suspense account. So the journal entries in this case wherein the errors are detected in the next accounting period, the journal entries will be similar to the situation wherein we detect the errors after preparing a trial balance and preparing a suspense account. Only thing is, all your income and expenses account wherein your income and expenses account are affected, that has to be routed through P&L adjustment account or prior period adjustment account. Now let's see all the examples, all the transactions one by one. 1. Purchase of furniture was considered as office expense rupees 1,50,000. Depreciation charged at 10% on the cost. Now Let's solve this. Now what has happened here is there was some purchase of furniture which was considered as office expense. So this entry was passed last year. Office expense account debit to bank account. This was the entry which was posted last year. Now what should have been the actual entry? The actual entry should have been your furniture account debit to bank account, 1,50,000. Now what is a reverse entry for this wrong entry? Bank account debit to office expense account. $1,50,000. Now, what will be the rectification entry? If we had to pass rectification entry last year, the rectification entry would have been your furniture account debit 1,50,000 to office expense account 1,50,000. Now, but we are passing this entry in the current year. This office expense belong to the previous years. We are passing this entry in the current year. So instead of this crediting this office expense account, the entry that rectification entry that we will be passing this year is your furniture account debit 1,50,000, and instead of office expense we will be crediting to P&L adjustment account or prior period adjustment account 1,50,000. Now it is also said that depreciation was charged at 10% of the original cost. So now what has happened in the last year is this furniture was purchased, but it was not considered as an asset. It was considered as an office expense. So there was no depreciation that was charged for this. Okay. So had it been considered as your furniture, the depreciation of 10% would have been charged for last year. So now what we will do is, what will be the depreciation entry that would have been passed last year? Depreciation account debit to furniture account 15,000. But since we are passing this entry in the current year, instead of depreciation account, we will debit P&L adjustment account debit to furniture account 15,000. This is one more entry that we will be passing for the depreciation. Now we can also see these two entries. Here furniture account is debited by 1,50,000, here it is credited by 15,000. So instead of passing the two separate entries, we can also pass one entry saying furniture account debit to P&L adjustment account for the net amount, that is 1,50,000 minus 15,000. Now the next one. 2. Purchases were undercast by 10,000. Now purchases were undercast by 10,000, that is your purchases were reflected by 10,000 less. So let's see this. 2. Now purchases were undercast by 10,000. So purchases of account that was reflected, it was showing a balance which was less by 10,000. So if we would have passed this entry last year, what we would have done is, on the debit side of the purchase account, we would have written this entry as your purchase account debit to suspense account if we would have passed this entry last year. But since we are passing this entry for the current year, instead of purchase account, we will debit P&L adjustment account debit This is a rectification entry. P&L adjustment account debit. Amount is 10,000 to suspense account. Now, since this is a one-sided error or partial entry, we are crediting a suspense account. The second effect is given in the suspense account. Next, sales book were overcast by 15,000. Now, let's see this. Third one, sales book was overcast by 15,000. Now again sales book was overcast by 15,000. That means your sales account was showing sales of 15,000 in excess. So if we had to pass this entry last year, the entry would have been sales account debit to suspense account 15,000. But since the entry is passed in the current year, what we will do, instead of debiting sales account, we will debit your P&L adjustment account debit 15,000 to suspense account 15,000. Next, 4. A credit sales to Mr. P for rupees 25,000 was considered as credit purchases. So, a credit sales was considered as a credit purchases. So, what has happened last year is the entry that was posted last year was your purchase account debit to P's account 25,000. Actual entry that should have been done last year should be your P's account debit to sales account 25,000. The credit sales was considered as a credit purchases. Now this reversal of wrong entry would be your P's account debit 25,000 to purchase account 25,000. So the net impact of this was your P's account debit 50,000 to sales account 25,000 to purchases account 25,000. But now we are passing this entry in the current year for previous year. So instead of crediting the sales account and purchases account, in current year the entry will be your P's account debit 50,000 to P&L adjustment account 50,000. Since your sale is an income, purchases is expense, instead of sale and purchases we are crediting to P&L adjustment account 50,000. Now the next one. 5th, bank payment from Mr. A was recorded in the account of Mr. B, rupees 15,000. Now this bank payment was received from Mr. A, but instead of A, it was recorded in the account of Mr. B. So here bank payment was received from Mr. A, but it was recorded in B. So bank account debit to B's account. This was the entry that was passed in the previous year. But actual entry should have been bank account debit 50,000 to A's account 15,000. The reversal of this wrong entry is B's account debit 15,000 to bank account 15,000. Now the net impact of this is bank account gets cancelled. So B's account debit 15,000 to A's account 15,000. This will be the entry. Okay. Now if you see this rectification entry, B's account debit to A's account. So what has happened is B's account was wrongly credited by 15,000. So we are reversing that effect, and actually the payment was received from A. So we are crediting A's account. Now if you see, there is no income or expense account that is affected. So in this entry there won't be any profit and loss adjustment account. Also this is a proper entry, complete entry, wherein two accounts are affected for 15,000 rupees. So this is not a partial entry which has one-sided impact. So because of this entry, the trial balance will tally. So this rectification entry will not include your suspense account also. So even in the current year, the rectification entry will be same. Now the next one. 6. Cash payment to Mr. C rupees 2000 was posted on the credit side of the C's account. Cash payment to C. Now on the credit side of your cash account, we would have written payment to C. So to C's account 2000 on the in your cash book. Then what has happened is, in the C's account, this should have been written on the debit side, but instead of that, what has been done is this is written on the credit side. That is credit side of C's account 2000. Instead of debiting C's account, we have credited the C's account. So now we need to rectify this entry by debiting C's account. So C's account debit. Since this is a one-sided error, what we will do is we will credit suspense account, and amount is 2000. Now even in the current year, since there is no income or account affected, it will not be routed through profit and loss adjustment account. So current year also the entry will be same. Now the next one. 7. Sale of goods to Mr. Q rupees 60,000 was omitted to be recorded in the books. So there was some sale of goods to Mr. Q and it was not recorded in the books. So let's record it now. So sale of goods was not recorded. So the entry, if we would have done this entry last year, it would be Q's account debit to sales account, and amount is 16,000. But since we are passing this entry in the current year, instead of sales account, we will credit P&L adjustment account. So entry will be Q's account debit 16,000 to P&L adjustment account 16,000. So this would be entry for the unrecorded sales. Now since we have passed all the entries, now we will prepare a P&L adjustment account and the suspense account. We will post all these entries in the P&L and adjustment account and suspense account, and then we will see what is the net impact in the both accounts. Now here I have prepared P&L adjustment account and suspense account, and I have posted all the entries, rectified entries in P&L adjustment account and suspense account. Now if we see P&L adjustment account, on the credit side, the total of the credit side comes to 2,16,000. The same total here. Now this balance of 1,91,000. Now this is prior period adjustments. Okay, so this balance will be transferred to your profit and loss account, and it will be reflected separately as prior period adjustment or P&L adjustment account, and then from there it will be taken to capital account. This is one approach. Else it will be directly transferred to the capital account. This is one more approach, but it is better to transfer it to profit and loss account first and let it be reflected at separately as prior period adjustment, and the appropriate notes to account should be written in your financial statements to reflect what is this 1,91,000 and impact of this prior period adjustment on the current year profit and loss. Next, suspense account. I have posted all the entries in the suspense account also. Now if you see the suspense account, the total is 29,000. Now this suspense account, this balance should be transferred to your capital account. Now assumption here is, now see whatever errors are reflected here, that was one-sided errors which was due to which the trial balance of last year did not tally are reflected in the suspense account and they are transferred to the capital account. Now last year when the trial balance did not tally, what happened, what was done was there was some balance which was taken to your profit and loss account and then subsequently it was transferred to the capital account. So we can assume that the balance which was transferred to capital account was 29,000 last year, and the same errors which we have traced now. So we have got this balance of 29,000, so it should also be transferred directly to capital account to nullify the effect or the impact of that difference in the trial balance of the last year, which was already transferred to your capital account. So this was about your rectification of errors when the trial balance is made, even your final accounts are finalized and the errors are traced in the next year. So this is how you pass the journal entries for the prior period errors.